Good morning, traders, investors. Dale Circle Trader Boys here. We have the markets down. We need a retracement in this market, so this is looking good. This is nice and healthy. We got the S&P down almost 14 points here. Nasdaq down 21, Dow's down 111, and the Russell's down 11. The leader of the pack here is the Russell, the small caps. Dollar is up slightly. It's up 8 cents here, so maybe we're going to get a little bit of a move north here in the dollar. Money coming into bonds. The commodities here, being oil and precious metals, are all down slightly. Gold being the big leader to the downside here, down 1.1%. We got a mixed message coming from the big techs here. Apple's up slightly, Amazon's up slightly, Netflix is up. We got Microsoft flat, Tesla and Google taking a little bit of a break here. And coming to financials and so on, Goldman Sachs is down $1.55, and then our coronaviruses are slightly down here as well. So getting a little bit of a trace in the market, which is a good thing, healthy thing here. Apple's up slightly, so here's your Dow 30. You can kind of see basically a sea of red, which kind of makes sense with the Dow down 111 points. Right, so in the news. Yeah, so jobless claims just released. Forecast was 925. We got 1.1 million, right, in jobless claims. So that's probably going to send the market down a little. We'll take a look at the chart and see the impact of that report in just 1 second. For the rest of the day, U.S. leading index is coming out at 10 o'clock. Nothing to really report there, and not too much happening for the rest of the day in the economic news. In the charts, daily chart of the S&P 500. We do have a daily demand right here. And we're coming down to the 13 EMA on the daily chart here. So we've already tagged that and we're pushed up off it. So I would like to see us get deep inside this and get down to 33.20 here. Right down to that 20 period moving average would be phenomenal as a retracement. And then we get some absolutely great buy opportunities into a lot of these stocks. On the 60-minute time frame here, right, this is the demand level we put out there yesterday. You can see we just broke below that. And we came right up to the supply, which is the 20 period moving average here at the same time, the 200 period moving average here on that 16-minute time frame. So there's a lot of resistance with the supply level there. So we're going to look to break through this to the downside and see if we can get to that 33.20. So this is where the 33.20 number is coming from. We get to that 33.20 mark. This is where you're looking to get into some stocks and start to buy and continue the uptrend of this market. Right? In the Russell 2000 daily time frame, this is the daily demand level here on the Russell 2000. So we've got some room to drop there, and the Russell is the one that's leading the market to the downside. There's more money coming out of the Russell than any of the other major markets there. So let's take a look at the NASDAQ. NASDAQ is still resisting this move to the downside, if you will. This is your daily chart of the NASDAQ, and you can see down here is the daily demand right here. Right, the top of that body of the red candle right there, that is your daily demand. It's 13 EMA. So if the NASDAQ can get down to here, now ideally we'd like it to go lower. Right? I want it lower. And again, we get a nice retracement through here. Phenomenal buying opportunities going to be setting up. So you see the NASDAQ jumping around here, up and down, up and down, up and down. I want to see some weakness. Let's break this down a little further. Let's go into the 60-minute time frame on the NASDAQ. Now, if 60-minute time frame, we have this demand here. We did pierce below it. Right, so we're back up into the 20 period moving average, into this area right here of supply. Right, into this area right here of supply. So that's going to be a little intraday level. We are breaking down out of that area right there. So this would be phenomenal. Now we just break down a little further, a little deeper, and get down into this region down in here. So there's going to definitely be some support in this area here. As you can see, that was a previous demand level, proven demand level, and you'll have that move at the trend line coming through here. So that would be a phenomenal area for the market to sell off to, create some great buying opportunities in those big tech stocks, and then look for the push to get to the north side. So we'll see how this plays out. So this may find support in here with this demand here and push through this, and off we go to the races on the upside again. I would prefer the retracements. You can see in the VIX right here, we've got the little candle coming through on the VIX, and this is where we're looking to open the market in the VIX. So we are seeing some hedging taking place from the institutions. They are buying puts on the next 3 months contracts on the S&P 500. So with that taking place, the VIX rises. So we can see we get a little bit of fear coming to the market, and that could trigger this. Now we haven't got above this candle's high just yet, but we break above that candle's high, and that gets into a retracement of the market and a nice move up in the VIX. I use the VIX personally as a hedge on my portfolio. So I trade long call options. I buy call options on the VIX. So if the market does break down, the call options go up, and you can see this can go up. You say from 24 here up to 30 without any problem. So it's like a $5 move on the stock on very cheap option contracts. Great little hedge there. And here's the oil markets. Oil has just hit this demand level right here. This demand level right here is where the markets, this is a proven level coming through here. We've just traded down in deep into this. We've come out of that demand level and we're breaking up. If we can get above this candle's high right here, we're going to be bullish in oil, and that'd be nice moves. The next area is obviously going to be this supply zone coming through here. So 43.27 is the number where we're going to get some supply coming into play. So a nice little trade here for a day trade is 42.51, 43.27. So we're on this 60-minute time frame. You could break this down into a 5-minute chart. If we can break above this area right here, above that high right there, look for the move up, wait for the retracement, and then you can take that trade long. We'll see what takes place there and how that plays out. So that's the oil market right there. Coming into gold. Gold has just reversed off the demand level coming from here, and this is where the unfilled by institutional orders. This was a proven level right through here. Again, proven right through here. Gold, you can see, has just dropped down into this area right here, just tagged that demand level, and now making that move north. Right? We do still need to get above the pivot high right through here. Right? We need to break above this pivot high to be then bullish. Okay, there is supply in this market right here. There's unfilled sell orders sitting right here. So we've got to get above this candle's high right here. Right? Then what we can look for is the move to the upside. Right? Breakthrough. Okay, retrace. Generally what you're going to get is a sideways movement right here. Right? On the breakout into the supply level right here. Wait for the retracement, and your trade is going to be sitting right here if we get a basing right here. Then you can look for this to go up into here, pull back to here, and continue on up. We'll see how this plays out, but that's what you're looking for there. That'd be a setup for the gold market today, and that'd be a great little trade. On the bond market, the demand level in the bond market has held, and it is doing very, very well. Here's a demand level in the bond market. Right, we dropped into this. This is the daily time frame right here in this market. You can see we retraced yesterday on this candle here. This is yesterday's candle right there. Now we're making that move north. So you can look at a ETF, and you can take this transaction in the ETF market, and we should be able to get back into this supply region right in here. So there's a nice little movement in there. Bonds can't expect to go too much higher than this, because what's attached to the bond market is yield, right? And yield is just simply an interest rate return. Think of it that way. So with the yield so low, not many people are going to want to be buying bonds and get such a low return on the yield market there, right? So that's our wrap for the day. It's our wrap for the day. Thanks for coming in. It is a beautiful, beautiful Thursday morning. We'll see you bright and early Friday. Have a great trading day. Stop time.